Welcome to the After Hours Market Report at stockmarketfunding.com. With the Dow Jones daily chart, we have what we call a reversal top in play. How far it will go contributed to the debt crisis, we will find out between the buyer and the seller tomorrow. And the thing about it is, I am going to show where the rally started. This is when everything was going to be well at the 1075 area. We've been held hostage to Europe. Volatility has increased significantly. The processes that we're watching for is when we made this top, we came down, we tested it, we made the low, then we came right back with another new intervention with Europe. And everything looked good, and you had a big short squeeze back up to the original top here on the Dow, and you had a big sell down today to the 200-day simple moving average. You still have a buy signal in play. However, the risk remains right here. If we sell through the 200-day simple moving average and come down, it would intensify the sell stop market orders that would come into play, that would put more selling pressure through potentially the simple day moving averages on this daily chart. This bar right here today is a sell bar because they don't believe in Europe. We believe that the market will continue to sell into rallies, that rallies are viable, but people that are buy and hold, that when they get these rallies up here at calendar yearly lows, that they should be selling into the rallies, just like when we said the tops were over here. You want to verify it? Go back to stockmarketfunding.com. Go to the April videos on the Dow Jones. You will see where we called the first 7-week reversal, and then the longer one to the calendar bottom, and then this bottom down here. And we rallied up with Europe, and we've came down, and we've tested these tops. This is a major reversal day to the support level that will be down here in the key moving averages. Where will those support levels be? Well, we'll tell you. They will be at these moving averages right here on the Dow. 100-day simple moving average on the Dow will be in the following manner. 11,571 is that 100-day moving average. That's way down here. The alarming part is that the 100-day moving average should not be declining, even when you have upside rallies. That's something wrong with that. The 10-day and 20-day moving average, 10-day moving average on the Dow, 11,883.75. The 20-day is going to be 11,841.56. The 40-day simple moving average, and they're all converging together. They are pointing up as far as the shorter term simple daily moving averages, which is a bull case for the bull, because it's not like they're going down in value and crossing over and going in the other direction. The problem that we have is we believe that people will continue to sell into the calendar end month of December. Then they will continue to sell into the January of 2012. We don't believe that the Dow will have any great potential sustainable huge rallies until we get more into the March period, but more so that March of 2012, if we get a lot of selling, as we think will happen in January and February, is that we could sell all the way up and wash out these markets in the first quarter of the year. That's part of our bear case. Our bull case, though, is quite different, and that would be that the government would have to do the right thing, and that if we had some kind of relief and policies that would work. The Obama administration hasn't helped the Dow. Yes, volatility, short covering, understanding the true market, understanding the bear, understanding the bull, but understanding that once again there is major risk for the bull with this reversal, and once again you cannot get up above this Look at when you're barreling at resistance, and then you get a selling day like today, 200 points, 198 closed down. You're below the 12,000 mark again. The thing about it is, any upside rallies will remain to be sold into and sell short. If we break down and sell through these moving averages tomorrow based on the European decision overnight, and what they're going to do is, this is a definite daily reversal. Yes, you have some near-term support here. However, the risk is very extremely high, and the risk should be addressed with individual people who care about what they're doing, is to take some of the risk management training skills that we have available. MMTs, we have a major reversal today. If we don't hold the key moving averages and bounce off of these moving averages, just like we bounced over when we went through them, we had a sell program through all the moving averages right here. We got above them all right here. Now, when we come down and test them, if they do not hold support level, then bear funds is what we'll be looking at. The bear fund, yes, they have to be managed correctly, and they too have to have risk management application to them, because a bull fund and a bear fund have the equal amount of risk volatility, and both are treated the same. That is the Dow reversal, minus 200 points. Daily simple moving averages are coming into play.